Hello and welcome back to The Note. We're going to focus on the long term today, and particularly the future of the Indian Ocean rim, because the short term is really difficult to gauge. Of course, in the next matter of hours we're going to have the UK election, and who knows what the results of that will portend for the UK economy, and we're going to have the US jobs report, which will have a crucial impact on expectations for the Federal Reserve. Those will be playing into a remarkably frothy picture in the bond market. Today was a very dramatic day, particularly in German bunds, where you saw yields on the 10-year gain some 25 basis points and then give them almost all back. Do bear in mind, even if all the gains in bunds over the last 6 months have now been erased, the bund yields remain lower than they had ever been in history before the end of last year. Now, given that we are in such a complicated situation for the short term, let's look at a very interesting survey for the long term. We've just had the publication of the latest growth forecasts by Harvard University Center for International Development. They look at economic growth in a very unusual way. They look at economic complexity. It's not the volume of a country's exports that they're interested in. It's the complexity, the diversity of those exports, the ability to take know-how from some sectors and transfer it to others, the collective knowledge that a country has accumulated. And that turns out to be a driver for growth in the long term. It means that countries that were without big resources and that have to be sharper, smarter on their feet, like Japan and South Korea, in the long run grow faster. Now, on the basis of economic complexity, these are the countries which show themselves as being the most developed at present, having the greatest complexity. There are a few great surprises on that list, but do note how low the US is, note how well a number of Eastern European countries show on this, and also note that China, on which we have been reliant for growth for the last decade, doesn't even appear. Now, however, what's really interesting is the forecast for the next 10 years. This is based on those countries that have shown the sharpest improvement in their complexity in the most recent trade data. And you can see that on this basis they are expecting huge growth for a group of countries clustered around the Indian Ocean. We're no longer talking about the Atlantic or the Pacific Rim. It's now going to be those countries in East Africa and particularly in India and the rest of the Indian subcontinent who will be leading global growth. Now that's very good news, because that means the alleviation of human suffering for a lot of those countries that are traditionally rather weak in resources. It's also good news because it will mean that there is a new source of growth to pull the rest of the world through. But the forecast is that China will be only growing at 4.6% per year. That's much less than it's been growing at for the last 2 decades. It's much less than people are expecting. It's good that India will be picking up the baton. It's rather alarming that China will be slowing down to that extent. Now, is there any use that you can put this data to for the short term? No. In the longer term, though, it does suggest that we should be nervous about the outlook for growth in the West, and that it would be a good idea to start diversifying away from countries and resources that are reliant on China and starting to invest in countries on the Indian Ocean rim.